Exxon has lost some of its share buyback mojo, and that is no bad thing. Chris, they had their earnings out today, and amongst the fact their earnings are down 20% compared to last year, they're also cutting back their share repurchase to $3 billion a quarter, which is a lot of money. But you're saying, it's a good idea on one hand, but on another, on a much wider scale, it's bad. Explain to me what the problem is with their share buybacks.
Well, essentially, they've always had this very indiscriminate habit of buying back shares whenever they had cash on hand. And the trouble is they have most cash on hand when the oil price is high, and also so is their share price.
Right.
And then whenever their share price slumps and they have less money, they buy back fewer shares. So that's a pretty lunatic way of spending shareholder money. Much better when you have cash on hand to just give it directly back to shareholders. They can decide if they want more Exxon stock, let them buy it themselves.
Directly through dividends, you're saying? Yeah, okay. So you say they've been spending the past few years buying at the peak, so I assume that they've just let it drop back when earnings go down.
Yeah.
So that is, you're right, that's very bad for shareholders. You want to buy it at the low point if you possibly can to save money for everyone. So, but they're cutting it back now. They were doing, what, $5 billion a quarter for 2-3 years now.
Yes.
The second quarter they cut it back to 4. Now they're saying it's going to go back to 3. So that is effectively going to be a 40% cut on this time last year. So why isn't this good news?
Well, I think the only reason they're doing it is because they're short of cash, that they've upped their capital spending massively. Production is not up. So they have a lot of these monster projects that are costing billions and billions and are not going to produce any of the black stuff for a couple of years. But my suspicion is that the moment they get the cash, they'll be right again back purchasing their shares at whatever volume they can.
So on a short-term basis, at least they're noticing. I think I looked at first, second quarter, and they had $9 billion of cash at the beginning. They had $6 billion at the end, and you're going to think, okay, we've got a bit of a discrepancy here, we should cut back. So cutting back is fine, but only if
they're being prudent. They at one stage had $41 billion of cash in 2008. One could say that's probably a little too much, but $6 billion they're getting. Obviously, they have a rock-solid balance sheet. It's not that they have a shortage, but they're even for a company that's this solid. They really need to trim that back a little.
And also, you're saying earlier on to me that they've invested a lot of money, but a lot of the fruits of that investment won't necessarily come through for 2, 3, 4 years.
Yeah, they have gigantic projects in Canada that are going to be really nice assets for investors, in that they're going to be yielding oil for a very, very long time at a very high rate. The trouble is we have to wait another couple of years before we see that happening. So they're going through this period of pain where investment is high and growth is very slow.
Right. And comparing that to some of the other big oil companies, their stock price so far this year at Exxon it's up, what, 7 or 8%, but it's not as much as a couple of others, right?
Yeah, Chevron, which is, I suppose, their nearest US rival, they're up about more like 14%, so obviously they've been lagging.
Okay, thanks for that, Chris. I'll let you crack on, and we'll be back with more breaking views tomorrow.